have made up their mind on consolidating perhaps around this mark for now at least.
And well timed, I would believe. You do need some sort of consolidation after we've seen what we have over the last couple of months of trade. You've got that big event globally, right? The September 17th, 18th Fed meet, but in between that, you've got geopolitical changes and developments that will continue to keep the markets quite active. That's how US markets ended. It was the Nasdaq that went home with marginal gains. The Dow and the S&P 500 didn't do too much in overnight trade. Asian markets as well are trading largely flat. So you've got, in fact, now they've turned more negative than positive. Japan has been on the sell side for the last couple of weeks now. Hang Seng is also trading lower. China sees some weakness. So largely speaking, Asian markets seeing some profit taking emerging after a good run post the big event or the big fall that we saw on August 5th. A quick check on implied Nifty before I take you through all the global data point this morning. Flat as a pancake. That's what you're expecting on the index. 25,000 will be defended, but it could be some time that the bears and the bulls will struggle around these levels before they either move up or down. Well, in terms of what we have, Asian markets will be eyeing the Australian economic data. That will keep those markets busy in trade. You've got the CPI data expected from Australia. That's largely the only trigger for Asian markets today. Well, Wall Street, like I said, ended with marginal gains. There was no runaway rally. There was no aggressive buy or sell calls emerging on the street. It was rather quiet. The one trigger that traders and investors on Wall Street are now tracking very closely is NVIDIA. NVIDIA will report earnings on Wednesday post-market closing, which means Wall Street will only react to it on Thursday morning, and we will react to it on Friday morning. Remember, NVIDIA has had a very strong run. It's been the best market, the best stock of the world in that sense. Global investors also invested on NVIDIA. NVIDIA reports earnings. They've gone, the stock is up 159% year to date in terms of activity that we've seen. Well, one more counter that caught my attention was actually super microcomputer. Hindenburg is back at its games, put out a short sell report in trade on Wall Street, on back of which the stock saw some selling pressure. That was, of course, what was to do with Hindenburg and Super Microcomputers, which is a Nasdaq listed company. Apart from that, another report that I came across was UBS, where they've said that while the market seems so focused and moved so beyond any fears of a recession in the US, UBS actually believes that a chance of a US recession now is 25% versus an initial expectation of 20%. So they do think that the chances have increased slightly of a recession in the US, and they seem concerned about the labor market. So that's largely what we have. The dollar index has slipped to levels of 100, 155, and the 10-year yield has risen risen marginally. Well, you've also got crude. You want to track this one. It's up 7% in the last 3 trading days. But in overnight trade and across Asia, crude actually saw profits being taken off the table. Crude corrected nearly 2%. And this largely came in as Goldman Sachs indicated that the supply constraint that was going to come in from Libya may be short-lived. And even if it isn't short-lived, it's not going to be a one-shot, but it'll be a gradual decline in production cuts. So crude, of course, adjusting itself to the reality that there may not be a dramatic drop in supply. Well, apart from that, gold, which has been the story of the year, and I think all Indians would be very excited about how gold has done this year. Gold is up 22% in 2024. But what we do see this morning is gold is consolidating. They've also had it so hard and they've ran up so significantly that they're taking a breather now. And between now and September 17th, it could be consolidating on gold. But of course, once we get that rate cut, you may get gold prices inch higher and go up to levels of $2,700. Well, that's what we have on gold. In terms of interesting local activity, the implied Nifty is indicating to a flat start. But interestingly, on yesterday's day of trade, FIs had come back and buy. They do that sporadically and very, very randomly. But FIs bought shares worth 1,500 crores. DIs have actually sold in yesterday's trade. Very small portion of sell number, but nevertheless worth a mention of about 600 odd crores. But it all seems like all is well as long as we maintain 25,000 Agam. But we've had 8 to 9 days of consistently ending in positive territory. Some may call it resilience, some may call it's a slow-moving market. But the fact remains the market is taking everyone higher. It's a broad-based rally. There is sector rotation. There is different leadership coming in from different parts of the market. And of course, you've got that much anticipated RIL AGM as well next week. So lots of moving parts, but what do we have for this morning?
Well, this morning, of course, again, 25,000 is the word here. And as you mentioned, we have moved up substantially over the past 8 sessions. In fact, even though the gains have been just marginal, we are in fact advanced. We have in fact advanced to the 9th straight session yesterday. And based on that, we are watching out for whether or not we could, in fact, make that new life high once again. Now, yesterday was a day where we were just 5 points short of that life high. It's not really a big deal because, it really doesn't move the needle when it comes to markets. But every time you make a new life high, you also tend to start seeing a little bit more bullish positioning coming through as far as markets go, and that could potentially lead the markets even higher. That said, and in terms of the range that we are keeping an eye on, at least as far as the Nifty is concerned, it is essentially now 25,500 on the higher end, which is a tad bit away. So you may likely see a little bit more resistance, at least in the near term, around the 25,200 mark. Should we, in fact, see 25,100 being taken out. And the reason why we're looking at 25,100 is because we're just rounding up the life high of 25,078. Of course, on the lower end, while 25,500 remains one crucial pivot level, we are also watching out for 24,500. Again, another round number to keep an eye on. But it is the Bank Nifty weekly options expiry today, and that's where we are seeing a lot of traction around the 51,500 mark in terms of calls, at least. It's going to be that sort of a range in today's day of trade. On the lower end, again, 51,000 becomes a little bit more of a base because we've seen the Bank Nifty sustain above that particular level over the past few days. It's been a fairly neutral market. We've seen a lot of consolidation for both the Nifty and the Bank Nifty. There is an expectation that the Nifty Bank will perhaps outperform the Nifty by just a tad bit over the course of the next couple of sessions because it does seem like it needs to do a little bit of catching up. But it will all depend on heavyweights like HDFC Bank, ICICI Bank and Axis Bank and what they can in fact do to contribute to this. And if that contribution comes through, naturally the Nifty will also be a big beneficiary of that, and which is why we could potentially see the Nifty move above and take out that near-term soft resistance of 25,100. But on the whole, Samina, we're continuing to expect a little bit more consolidation over the course of the next few weeks. Just a quick point on your fund flows as well. You already mentioned how things have panned out. FIIs yesterday were net buyers for the 4th straight session, and DIIs were net sellers after 16 straight sessions of buying. So I wonder if we are actually looking at a new trend setting in, but it's going to be a wait and watch on that one.
Well, we're still not attractive when it comes to valuation, so I don't know whether there's a trend reversal, but FIs usually buy 1 or 2 days in a week, and also with activity that's picking up in the other verticals, so block deals largely in the last couple of weeks where we've seen promoters sell stake. Now this stake sale usually is getting picked up by foreign investors as well, so the likes of the government of Singapore, GQG, these are numbers as well that add up to that FI buy number that we see. A quick check on how the VIX played out in trade yesterday. Like we said, it's been subdued, right? So you've not seen big moves on either sides. And the VIX continues to see its downward journey, another 1% off on the India VIX, indicating that is giving some more support to the bulls. In terms of sectorial activity as well, and Agam, you might want to come in on this one. It was consumption and metals that saw some profits being taken off the table yesterday. As we go into trade today, Bank Nifty surely looks very well placed.
Yeah.
I also think with that crude easing off a little bit, OMCs might start finding a bottom, and I'm not saying a bottom in terms of a medium-term outlook as well. In terms of trading activity, OMCs sold off quite sharply. Today could be a day that there could be some buying coming in on the likes of an HPCL, BPCL and IOC. And because we are missing in terms of global cues, FMCG, consumption and domestic-facing themes should be getting in a little bit of buying at least, if not a runaway rally of sorts. So I think those are two sectors you want to track. OMCs, in my opinion, and consumption. So local themes largely will be in focus today.
Yeah, absolutely. And of course, besides that, we're also watching out for the auto sector. Of course, in terms of news, we have an update on the scrappage policy. We have changes with respect to Tata Motors, specifically in terms of its weightage, given we will see the extinguishing of the DVR shares too. So that's the other sector which will be in focus going in. But in terms of stock-specific action, Samina, what are we keeping an eye on?
I think we'll start with Tata Motors because we said usually post-earnings season, the few weeks after earnings season is when news flow really quiets down. And that's the phase that we are currently living. Tata Motors will be one to watch. You've got, we of course reported this a few days ago, where Tata Motors DVR shares will be removed from the FTSE All World Index effective Friday. The impact of that is Tata Motors weightage will increase marginally from 55.55 to 57.3 in the FTSE All World Index. So sentimentally, this is one that could impact the counter in today's day of trade. Smaller names, but worth a mention. Order wins is always a good news for the corporate sector. PNC Infra is going to be one you want to track in early trade. They've been declared the lowest bidder for a highway project in Uttar Pradesh and Bihar. The size of this project is about 380 crores. So it's a good sort of win coming in for PNC Infra. The stock will be getting a gap up in trade. Well, Zydus Life has been on the sell side over the last few days. First the acquisition and then, of course, not winning that drug approval. But this morning, we have news that they have got an FDA approval for amantadine extended release capsule, 68.5 mg, and for the same drug with a higher power and a higher dosage of 137 mg is awaiting approval. So there is a tentative nod for the greater strength of the same drug, and for the lesser strength, the approvals have already come in. Well, apart from that, you've got NBCC. I would definitely watch out for this one because they are going to be having a board meet soon to discuss the bonus issue. This meeting is scheduled for the 31st of August. It's not whether there will be a bonus issue. There is expected to be a bonus issue. The size of that is what will be considered on this meeting. So that's what we have in terms of stocks. I've got a bunch of counters in terms of blocks, and you've got that big bang listing expected. But before that, anything else in the secondary markets?
Of course. Well, we have Zee Entertainment, which will be in focus now. It does seem like it's settled all the merger-related disputes with Sony. The merger, of course, was called out some time ago, and the company has said that all claims, including the $90 million termination fee, as well as damages, have been settled. Besides that, we also have ICICI Prudential Life, where the company has received a GST demand and a penalty order for 429 odd crores from the Maharashtra Tax Authority. This could perhaps weigh down on the sentiment because this stock was actually up as much as 3% yesterday, but it's a wait and watch on whether or not the company does decide to contest this as well. Moving on, we also have Zensar Engineering. The company has launched the US subsidiary Scorpion Trackers and targets a 2,000 megawatt annual supply by 2028. So this one is making moves in the US as well. And finally, we have Skipper, where the company is looking to raise 600 crores via equity and debt. This is going to be an interesting one. Skipper has been a relatively stronger counter. It has, in fact, gained quite a bit over the course of the last 12 odd months. And again, let's see how and what it does with these funds and what areas does it look and seek to invest. But all in all, it could potentially have a positive impact on Skipper too.
So that's another good one to track this morning. It was a smaller counter, but there could be activities in these names. Adding a few more to that list, Office Space Solutions. They've signed a pretty large managed aggregation deal of 3 lakh square feet with Nifty Group. We've got the size of the deal, but of course we don't know what the revenue inflow or the timelines of this deal are going to be. But for now, sentimentally, a huge impact, a positive one at that. Office space will react and respond positively to that news flow. Medi Plus Health, if we can get this one, because this one's been in the news and we will be talking to the management soon as well. Warburg Pincus and its affiliate companies have sold a significant stake. They've liquidated their entire 11.35 stake in Warburg Pincus. Now, usually when we see these big blocks happen, the stocks turn out to react quite well to them. The stock was up 5% in trade. And it's going to be all eyes on that much anticipated Orient Technologies listing. Of course, we'll be covering more of this as we go along the show, but the grey market premium indicating to an over 40% gap up on this one. Remember, Orient Technology was subscribed almost 152 times when it closed its IPO. So a big bang listing expected in today's day of trade. Well, that's what we have in terms of stocks, but of course you've got the big story which may not be in the listed space but definitely worth a mention, and this one is NSE. We understand that NSE is making an attempt once again to list itself with a fresh proposal going to the exchanges. Sajid, of course, who tracks us closely, is standing with us. Sajid, I know there may not be too much of retail participation in NSE, but every family office, every significant investor with quantum of money is exposed to NSE or has scrambled to get NSE in more ways than one. While they are going back and going to give this another attempt, third time lucky, I don't know whether that's going to happen for them, there are concerns. And we've also seen data, I believe, where FPIs have been consistently selling their stake in NSE for the last 6 months. The last time a foreign participant actually picked up NSE was all the way back in Jan. Prices, I know, have been moving gradually higher, but that has nothing to do with the fact that it's been tough, and who knows whether they're going to hit the jackpot this time around.
That's true, but to answer that question about FPIs and the family offices,
family offices are holding on
to it, and FPIs are selling, and many of the family offices and domestic funds, especially opportunity funds which are looking ahead of IPOs, are picking up.
From what I even know, I think it was the IFL Opportunities Fund 2,
yes,
which also has a significant exposure to NSE.
To that. Radhakrishnan, the money is 1.58%.
But having said all this, there is an overhang. Because at the end of the day, you want an exit. Your money is only as good if you get that price at exit, right?
Yeah, and the fact that no one can easily get a stake in NSE because every stake purchase has to go through a board approval. There's a fit and proper criteria which is there. So even if you want to buy one share of NSE, which is currently valued at 5,500 rupees in the market or in the OTC market, you still need a board approval to.
And I guess that's why this is restricted to the larger families that own NSE.
So the thing is. There's an ongoing, to give a perspective, there's an ongoing case which is in Delhi High Court, and the Delhi High Court, there's a PIL which was filed asking SEBI to speed up the entire IPO process. As part of that, SEBI had put out some reservations saying that there are a couple of things that needs to be done. The first one was a co-relocation case, because of which the entire IPO got derailed, and then secondly there was a technology issue because we've seen quite a few disruptions that happening in NSE. Those two things having been addressed, and maybe at the advanced stages as we speak, the regulator said that for us to give an approval, they have to file an application. Right. They haven't even filed an application, so how do we give an approval? So what NSE has now done is that yesterday there was a shareholders meet where they have announced to the shareholders that the board has approved filing an application with the sector regulator, which in this case is SEBI, seeking to file a DRHP for an IPO. That has been done, but that's the first step. The SEBI will have to come back and give an NOC. Post that, NSE will have to prepare a DRHP, which is again at least a 6 months process, because filing a DRHP requires a lot of that, and then the SEBI scrutiny. So we are looking at an IPO which is at least a year and a half away. But the first step is the NOC which comes from SEBI. Once the SEBI NOC comes in, then things move forward there. The bigger issue there is is the thing that, and this time around there is a chance that the IPO may go through because there's a court process in place, and the PIL basically seeks approval for the IPO through a court process. The regulator has been very reluctant in giving that approval, and the reason being that there are multiple investigation agencies who are involved in this who are investigating the co-location thing and the dark fiber issue. All those things are there,
right.
And so the regulator doesn't want to take a decision pending those investigation from those agencies. But if there is a court-convened or court-directed process, the IPO can proceed, and all this can be made as a disclosure to the DRHP.
You know, I'm going to ask you this because I know you've tracked this very closely, and very recently we did a BSE versus NSE in terms of earnings as well. And just to add some perspective, all the way back in 2021, the number of families in India that owned NSE was a mere 65 odd. Today, the number of local domestic families that own it in India stands at 4,300. So that's the increase in allocation that Indian families have to NSE. Well, also just to, pardon me, it was 650, that is now 4,300. Sajid, while I know that there is a long and much awaited IPO and that's when the kicker will come in, how concerned are you as somebody who tracks this counter in terms of the derivative volumes dropping, the fact that there is increased competition from a BSE? We've seen the earnings were not bad, but the fact remains IPO is one thing, business fundamentals is the other thing. Comfortable with that, or do you feel like...
So it's going to be a sector-wide impact, right? Means as and when the F&O comes into play, there will be impact not only on discount brokers, the traditional brokers and the stock exchanges. Plus the true to label criteria will also have an impact across the board for all of them. If I'm not wrong, NSE has already clarified to the shareholders that the impact of F&O could be as much as 25% to the earnings. So that is something which we need to look at. And if NSE is getting a 25% hit on the earnings, BSE would get not a similar one, but a lower one, because BSE doesn't have that much of a market share in the derivative market.
Right.
But the issue is that BSE is trading at 35 times FY26 earnings, which gives it 3,100 rupees or something. That's a price band which is there. If you put the same multiple of 35 times to NSE, that price of NSE, which is currently at 5,500, it goes to 7,000 rupees.
Right.
So from a 2.7 lakh crore current valuation that it gets, it goes to almost 3.5 lakh crores if you put the same multiple of BSE. So the trigger for NSE investors, or we'll see the off-market trading again picking up the moment the NOC comes through for the IPO.
You will start seeing an increase in demand.
Demand again coming.
And then the prices are all over the place.
So just want to also point out that BSE has the advantage of a low base right now. Their F&O segment is relatively new, and which is why their growth rates are
going to be much higher.
Looking at their growth rates are looking higher. But I'm looking at the NSE growth rate as well on a year-on-year basis for the year gone by, and they're around 25%, 26% on year-on-year, and this is on an already high base. So NSE continues to enjoy that kind of traction when it comes to this increased participation. In general, of course, once it lists, it's going to be a wait and watch as to what price to earnings valuation it gets. But as Sajid was mentioning, it's currently at 5,500 rupees per share. If you actually value it at BSE,
it's going to be
valued at 7,000.
But it's a little bit like the Zomato Swiggy story, right? It's about listed versus unlisted.
The point is that BSE had an EPS of 19 rupees for FY24. And in the first quarter itself, it did an EPS of 19.
Right.
So, we're looking at around 75, 80 rupees for EPS for BSE in FY25 and 88 rupees of EPS going into FY26, given the fact that you have all those disruptions coming in.
My only concern on NSE is that, once we get this NOC, the listing does happen over the course of 1 year. You have investors who've held on to this stock for 4 to 5 years at an average.
No, I've been tracking for 10 years. So there are investors who have been after it, after IPO for almost 10 years now.
And we have about 5,000 odd local investors who are in families that are invested in it. Your Ramesh Damani's also being part of it. What happens post-listing? because you've stayed on this counter for so long, waiting for it to list and give you an exit. I would imagine that once this even hits the market, if it does and when it does, it may not be able to catch up with BSE's valuations, because there will be exits that investors would want to mark, because beyond 5 to 10 years...
investors may choose not to exit if they are trading at those valuations. They expect there isn't enough of a runway. Remember that BSE will also have to catch up eventually at some point in time once that base effect comes into play. And we're not looking at a 1 year, 2 year game. I'm sure a lot of these investors who have already been in NSE for the last 10 years are likely to stay with NSE for another 10 as well.
Oh, well, let's wait and watch, and let's hope that NSE gets lucky third time around. This one is going to be significant. And of course, like Sajid said, even if this goes through a listing for at least another year, is not what expected. Well, in the meantime, the markets are indicating to a very flat start, so don't expect too much in early minutes of trade. Global cues are muted. Locally as well, there's not too many news triggers that will drive the broader market sentiment. Let's talk about stocks. There may still be a few that you want to track, and Zee is one of them. It has finally entered into a settlement agreement with Sony Entertainment. Well, they are expected to settle all disputes before the Singapore arbitration. Richa joins in with what the brokerages have to say. Richa, there's finally an end to this long-drawn story, marriage, divorce, whatever you want to call it.
Right, you're right, Samina. Good morning. As you rightly mentioned, the settlement between Sony and Zee has come to an end. Both of the parties have relinquished their rights to file any claim against each other with respect to this kind of merger. Now, going back to the history, Sony and Zee had come out with a merger which was approved by the National Company Law of Tribunal back in August 2023. This was approved by the bench. However, in January 24, Sony had terminated the merger, citing reasons and non-compliance by Zee Limited, and they had also sought $90 million in termination fees. However, yesterday there came a notification where both the parties have mutually decided not to file any claim, and this is positive for Zee, as it will now have to, will not be required to pay this 90 million termination fees. Now, coming to the brokerage house recommendation, we have two extreme recommendations, starting with Citi. Citi maintains sell rating because it remains concerned about the potential impact of the cost-saving measures. Now, Zee had also told in the last call that it will shift its focus to having constraint on its cost to maintain the EBITDA margin. It had guided for around 18 to 20% by FY26, but Citi believes that it could be very difficult for the company and could also lead to cautious investment behind content which can affect the top line as well. But then we have Elara Securities, which maintains buy with a target price of 210, implying an upside of 40%. Now, the reasons behind this is because the brokerage house expects better growth rates in the festive season, and also these cost measures which I just stated would improve profitability, and this is expected to continue going ahead as well. Improved efficiencies and lower losses will also drive valuation re-rating, is what the brokerage house believes. So, two extreme recommendations: Citi with a target price of 137, implying downside of 9% around, and Elara Securities with target price of 210, implying 40% upside.
Well, that is the two country views coming in on the counter. It was up about 11% yesterday. Remember, this news hit the market pretty late in terms of the trading, but 3:15, 3:20 is when this news hit the street, and the stock reacted very sharply to that news flow. But of course, there are going to be a whole bunch of counters that we want to track today, some on back of block and bulk deals as well. Anushi is joining us with a list. Anushi, a big one on Mediplus from Warburg Pincus, I know, and the stock though responded positively to that, but I believe you've got some more that we're tracking this morning.
Hi, morning Samina. Absolutely, as you mentioned, there are a bunch of stocks which will focus on the bulk and block deals. I'll start off with the block deal and focus first. Trent Limited, over here, Dodona Holdings sold about 0.19% of their stake, and this was at a price of 6,925 a piece. But do note that they held about 4.53% stake as of June 24 shareholding pattern. the stock was kind of flat. It was down about 0.73%. But if you look at its overall 1 month performance, the stock was about 25% up in this month. Now coming to the bulk deals in focus, we have a clutch of names over here. First, starting off with Tata Technologies, in which TPG Climate sold about 2.98% of their stake, and this was at a price of 1,140 a piece. They held about 9% stake as per their latest shareholding pattern. But on the buyer side, we have Copthal Mauritius Investment, which bought about 40.1 lakh shares, representing about 0.98% of the equity, while Gazalo Master Fund bought about 0.76% of the stake. Here, the stock did end about 4.8% higher in yesterday's trading session. Moving on to Aavas Financials here, Amansa Holdings sold about 2.21% of their stake of the 3.16% stake they held of June 24. On the buyer side, however, we have Nippon India Multi-Cap Fund, which bought about 1.26% stake. Do note that Nippon India's Small Cap Fund already holds about 1.47% of the stake in Aavas Financials itself. Last one on the list is Rolex Rings. Here, a bunch of promoters and mutual funds which have sold their stake in this one. I'll start off with the promoters first. Ashok Kumar Dayashankar sold about 0.99% of their stake at a price of 2,419, while Sanjay Kumar Bhagwanji Bole sold about 0.64% stake. Promoters total hold about 55.25% stake as of June 24. While on the mutual fund side, ICICI Prudential sold about 1.17% of their stake at a price of 2,425. On the buyer fund, we have a bunch of mutual funds which have shown interest. SBI mutual fund picking about 1.02% stake, while Kotak Mahindra Mutual and Franklin Templeton Mutual Fund have bought a stake in the range of 0.5 to 0.62%. So these are the stocks which will be in focus ahead of the bulk and block deals which happened in yesterday's trading session.
Thank you very much for that, Anushi. Those are a bunch of names you want to track. A couple of other counters that I don't know whether we've added, but just a quick mention. Of course, Tata Tech is going to be a big one. Remember, they have it's TPG that increased the quantum that they own in Tata Tech. In fact, they used to hold 9% stake as of June 2024. A lot more being upfronted. So that's largely where you're seeing the the FI hands coming in and picking up stake. Well, a few more to add to that list is UPL. They've subsidiary UPL Corporation, through its step-down subsidiary, has acquired 20% stake in PT Excel Mego India. Post this acquisition, UPL will hold almost 100% stake in PT Excel. So that's another counter you want to watch out for. Apart from that, of course, this may not be market moving, but Dinesh Kara, Chairman and Non-Executive Director of SBI Cards and Payment Services, has, of course, resigned from the directorship of the company effective yesterday evening. So that's one more newsworthy information that we'd like to bring to you. May not be market moving in that sense, but of course Dinesh Kara has spent a significant part of his career building out SBI Cards and SBI. Along with that, you'll have a few more stocks that we will track, the likes of Vodafone India. The government has said that they won't be looking to liquidate their stake. That led to a positive up move on Vodafone India as well. But all eyes on what the index does, and the hope is that after being muted for most part of August, Bank Nifty may actually, carry its weight and help the Nifty conquer new heights. As we see it, the last 45 minutes, the implied Nifty is also improving. So it seems like it could be a positive start as opposed to a negative one this morning. Agam is standing by with more on the F&O picture. Agam, we started the day very, very flat in terms of programming this morning, but it seems like we could be getting a positive start this morning, but it will depend on Bank Nifty to help the Nifty scale new record highs and see that momentum come in, which is missing from the street.
Spot on, Samina. In fact, it was the point that I was trying to make earlier as well. HDFC Bank, ICICI Bank and Axis Bank are those which actually still need to catch up to quite a bit. And if they, in fact, actually start contributing upwards for the Bank Nifty, you will naturally see the Nifty move and take out new life highs. And we're not too far away from that mark. But let's take a look at how things have panned out yesterday. Now, of course, we are in expiry week, so we're going to take a look at the rollovers and take a perhaps decipher as to how things are faring. So let's have the rollovers too, if we do have it. And that's the rollovers is currently at 36%. Of course, the Nifty expires tomorrow. The Nifty futures expire tomorrow, so that's something to keep an eye on. 25,000 is the big spot that we're keeping an eye on. As moving on to the Bank Nifty too, again, that's where we are looking at unwinding, of course, in the August futures. Moving on to rollovers, the rollovers will be a tad higher, again at around 38%. And as far as your option markets are concerned, coming down to the Nifty, we do have a lot of concentration of calls and puts around the 25,000 mark. But on the higher end, we continue to see an increased traction around 25,300 and 25,400 in terms of calls. On the lower end, a little bit more writing setting in around 24,800, which means it's a little bit of a base formation at the moment. And when it comes to the Bank Nifty, again, 51,500 and 51,000 on the lower end. It's a 500-point range that we are expecting the Bank Nifty to be within over the course of this particular expiration day. But in terms of stocks, again, we did see some amount of traction in Muthoot Finance, Bajaj Finserv, ICICI Lombard. So these stocks will be in focus today as well. In terms of unwinding, we saw about a short covering for NMDC and Sun TV. So keep an eye on these counters. But that said, let's also take a look at what our experts have to say. Well, we have Avni Bhatt of GM Financial who's joining us on the show right now. Avni, good morning. Thank you so much for joining in. Let's start with your views on the benchmarks. How are you trading them? What's the way forward here?
Good morning, Agam. As you rightly pointed out, I think the indices are a bit of sluggish, but the broader market is performing very well. And on Nifty, the levels, if you go by the levels, I think 25,000 for the August series holds the highest open interest as far as the options data goes. So 25,000, around 24,980 to 25,000 area will be very closely watched. And on the upside, the immediate resistance is around 25,080, which was the previous high. Once that is taken out, I think Nifty may move up to around 25,200. So the broader range for tomorrow's expiry, you can consider it as 24,950 to 24,150 to 180, somewhere around in this range. And as far as Bank Nifty goes, a very tight range of 51,000 to 51,500. That's where the entire Y concentration is. The rollovers on Bank Nifty are a bit lower, and let's see how the rollovers pick up. And only if this range, 51,000 on the downside or 51,500 on the upside, if any of these levels are breached, then we may see an extended move of around 200 to 250 points in that direction. Otherwise, more or less, the indices are range bound and not expecting much of a movement as far as the monthly expiry goes.
All right. Fair enough, Avni. So let's shift focus to stocks. And I believe you have a covered call strategy on Ashok Leyland. Can you take us through that one?
Yes. So Ashok Leyland, a higher high, higher low formation has been seen on the weekly charts. So the medium term uptrend is intact. It's in place. And on the daily charts also, after a recent correction up to 240 in early August, the stock took support at 20-day exponential moving average and started reversing. Now it has given a breakout above 258 and entered a new leg of rally that can continue up to 275 to 280. So since the view is pretty bullish, we are going straight away long in futures, but also taking care of the risk on the downside in case it spends some time between 258 to 262. Then in that case, we are selling 270 call. I wouldn't say as a hedge, but it will take care of the M2M figures. If at all the stock is a bit of, it may take some time to move up. So the view is bullish, and on the downside, the stop loss can be kept at 257. On the upside, we are targeting around 278 to 250. So one can buy September futures and sell September 270 call at around 7 to 8 rupees.
Okay, there you have it. That's the view on Ashok Leyland. And moving on, you also have your view on Bajaj Finance. Can you take us through this one?
Yes, so Bajaj Finance, it's a pure reversal play from the oversold zones. And since 19th of July till date, the stock had been trading below the 20-day exponential moving average, below all the short-term moving averages. And yesterday was the first day when it moved out of the range, and it managed to close above the 20-day exponential moving average. And long addition was seen in futures, as well as delivery volumes picked up. So I think the stock is ready to move back to its the higher levels of around 7,000 to 7,000 to 7,100. So to play out this move, we'll straight away go for a vanilla call of 7,000 for September series, which closed at around 140 yesterday. And we can target a high of around 225. That would be the target, and stop loss can be kept at 90.
Okay, so there you have it. That's the view coming in on Bajaj Finance as well. Avni, on that note, thanking you for joining us and taking us through your views in the markets, and of course giving us a couple of option structures to work around with. With that, it's back to you, Samina.
Thanks for that, Agam. It is the market update coming in. That's the F&O picture, and of course the verticals in the areas of the market that one could look at initiating trades on. That is Avni Bhatt's view there. The Nifty, as expected on implied Nifty, is expected to see a marginally higher start. A quick dip into what Asia is getting up to. It started off negative, oscillating between small gains and losses, but now, of course, it's pretty much all red across Asian markets. Remember, the Nifty has underperformed its Asian peers in the last couple of weeks post the August 5th event. So while Asian markets have pretty much taken on the losses head on and gained, our markets, slow and steady, nevertheless, have crawled back into trading at almost record highs. What we're expecting this morning is going to be another day of consolidation with a slight bias on the upside. Markets will spend time in the range. Bank Nifty may participate. Consumption could see some buying after yesterday's decline. And most importantly, OMCs may get a breather today after that big fall yesterday, as crude prices have finally eased off in overnight trade. So crude prices fell about 2% and they trade flattish in Asia this morning. That may just help a whole bunch of those HPCL, PPCL and IOCs of the world in trade. Media did quite well yesterday, largely on back of the way Zee closed out in trade yesterday. That rally could continue into today's session as well. Well, it's also another counter that caught our attention, and that's Medi Assist insurance. Take a look at how the stock did yesterday. When I last checked, Medi Assist closed at the day's high point, went home with a gain of nearly 8%. Well, what is the story here? Medi Assist Insurance TPA, which is a wholly owned subsidiary of Medi Assist Healthcare Services, early this week announced the signing of a definitive document of purchasing 100% stake in Paramount Health Services and Insurance. Now, what this means for Medi Assist, because it's a significant acquisition that they've added to their books. We did get a chance to catch up with the management to get an understanding of the plans that they have for the company and, of course, the rationale for this acquisition. Let's go across and hear out what the management had to say.
The Paramount has an operating revenues of about 153 crores, which is over our FY24 as nearly 25% from a top line perspective. Historically, we have acquired other TPAs who had lower single digit margins. And typically it takes us about 4 quarters for us to turn the business around, completely move them to our operating model, and then have the consolidated margins showing up. Medvantage integration is fully done. Raksha is in progress. And we expect Paramount, which is currently at about 9.5% margin, to start getting closer to our margins about 4 quarters from the date of closing.
For viewer reference, Medvantage as well as Raksha are acquisitions made by Medi Assist in 2023 calendar year. Now, to try and broadly work this, right? So can a 20% kind of growth rate on this higher top line of almost 800 crore be expected for FY25, or will it take a little bit of time, especially for Paramount to integrate?
So we've always bettered or at least matched the health insurance industry growth rates, Harsh, which have been around 20% compounded growth rates. Given that we recognize revenue over 365 days for every policy, typically you see a little bit of lag between our revenue growth and the premium growth. But on premiums, we expect to continue to track to industry growth rates because industry itself is expanding very rapidly.
Okay, so 20% doable on this higher top line?
we like to think so as long as the industry is growing at 20%, yes.
Understood. So you'll grow at or above industry is what I understand. Got it. And with regard to what this acquisition brings for you in particular, of course, all the market share accretion always helps. Your group business now an impressive 36% in terms of your market share in the group business overall, industry-wide. But outside of that, does it give you more pricing power in that sense? Scale, of course, but with it, does pricing power also come to you better?
I think historically the yields for all the TPAs have been very similar. It's not that pricing was the reason why customers actually switch TPAs, especially in the group business. Group requires a significant amount of high touch service and technology deployments. And that's where we've differentiated ourselves, and we're already at a 30% on our own. Really, Paramount coming in and adding another 6%, taking us to about 37% in group. I think will improve our same store growth and the retention rates far more. As an example, from the acquisitions last year, on a consolidated basis, we've improved our retention rates from a 92% annum to a 94%. So we like to think that Paramount coming in further strengthens our same store growth story.
When I'm looking at your balance sheet, of course, large current asset pool, but overall cash on books around the 150 to maybe 180 crore kind of number. You're going to be paying out 312 crore for this acquisition, maybe 4 to 5 months from now, depending on how terms have played out. But you expect to borrow some of this amount? How is it going to play out?
So if you look at us from a consolidated group perspective, we had about 270 crores of cash as of Q1. The enterprise value is 311.8. And then given that we expect the closing to happen sometime towards the end of the fiscal, we should be able to fund this mostly through internal accruals and as needed, maybe a short-term debt.
Understood. And would you continue to acquire companies because now you are, if I understand it right, larger than the next 3 players in the industry?
Yes, that has been the case for some time now. And so we'll continue to be opportunistic. Clearly for us, it has to make sense from a synergy of revenues perspective and our ability to sort of acquire the business and continue to grow. And then we'll continue to be opportunistic about it. But the story remains predominantly organic and same store growth.
Understood. What does this add to you in terms of, so of course, there are plenty of new clients which Paramount adds to your armor. But outside of that, are there any clients which are largely common with Paramount where you had low-hanging fruit anyway? What does it add to you in terms of unique customers as well as partners?
That's a great question. So thank you. I missed adding that. So today, the good thing is that both of us work with all of the insurance companies on the group business. So there's an absolute overlap from an insurer contracts perspective. But in our business, we are predominantly exclusive, right? So we don't have an overlap in corporate accounts, right? Barring exceptionally rare 1 or 2. So Paramount does bring us almost 3,000 plus, corporate accounts today with a premium of over 3,800 crores. That's what it brings to us. And the TPA fees and the yields are very similar to ours. So it should only improve our accretion on the same story.
That's the management of Medi Assist telling us about what's in store with respect to their new acquisition. But let's also take a look at what's on our watch list this morning. Starting up, we have IndiGrid, where they are looking at a fresh investment of 667 crores. Keep an eye on that. We also have Zydus Life, even as it gets an FDA nod for a capsule. Next up, SPML Infra, 174 crore fundraise at 215 rupees per share, and it's going to be an important one to keep an eye on as well, because this one, it does seem like it's at a little bit of a discount. Office space, where Nifty Group Pact has led to 3 lakh square feet in Pune, and again another important one. PNC Infra is on the back of another order win. This time it's worth about 380 crores in UP and Bihar. Moving on, we also have Zensar Engineering, where it has gotten in a US subsidiary and it's targeting a 2,000 megawatt supply by 2028. Godrej Agro is also in focus even as it acquires 49% stake in Godrej Tyson India. Indostar sells part of a stressed book to an asset reconstruction company. And we also have AB Capital, where it will invest 300 crores in AB Housing via rights issue. And then we have Wipro, which has extended its Dell partnership and its AI-ready platform. Next up, we have Asian Energy, which has raised 160 crores through a convertible warrants. And NBCC, this is the big one to keep an eye on, even as it will consider a bonus issue on the 31st of August. Infibeam Avenues, where its AI arm has introduced a women's safety feature. Apollo Micro, once again, an 11 crore order from BDL, that's Bharat Dynamics. And then we have Skipper. It will look to raise 600 crores via debt and equity, another important one to watch considering the kind of traction that we've seen. And perhaps the only stock that could potentially see some amount of pressure today is ICICI Prudential. It's got a GST demand for 429 crores from the Maharashtra Tax Authority. Wait and watch on whether or not this one will be contested today.
Right, well, that's of course a whole bunch of stocks that we'll be tracking in today's day of trade. Well, it's time now to get in our analyst as we gear up for trade this morning. Kush Bora on the technicals and Mayur Joshi on fundamentals, and Chandan Taparia, all three join in with their top ticks. I'll start with you, Kush. What is the call on the index? It's slowly and gradually reclaimed 25,000, which I think is commendable because it's come in a very broad-based, slow, steady. Some may argue that it's lacked momentum and guts so, but the fact is we are at 25,000. How do you trade the Nifty from this point?
Sure. Morning, Samina. Morning, Agam. You're right. In fact, it's a very healthy sign that the markets are, taking it slow and steady and not breaking it down, so to speak, the previous highs. This will perhaps give more confidence to the investors, to the traders that, this is a more meaningful rally. We haven't really just moved up and given way. How I see it is what we've been discussing over the last couple of days, which is the expiry factor is what is playing on the Nifty a lot more. So if I just give you, the details on the call and put, the 25,000 call and put both have a significant base with a premium of about 150. So I think that's the range that, Nifty will perhaps trade in for a while. Even if we get to a new high, which yesterday I think we missed out by, 5 points.
5 points.
I think this is going to be more psychological, more euphoria than anything more meaningful. I think, the more meaningful move will come perhaps once the expiry is over. So, that's on the Nifty. If you've got a long position, continue to hold. I don't advise going long on the Nifty for the next 2 days, till the expiry is out of the way. Beyond that, we think there is a big up move, on the Nifty around the corner.
All right. Well, on that note, let's also get in Mayuresh Joshi, who's joining us on the show. Mayuresh, I'm looking at returns for the mid-cap and the small-cap indices. On a financial year to date, we're looking at a 23% growth, and the small cap index has moved up around 27%, about 30% returns if you look at the calendar year to date. And of course, there's been a huge outperformance because for the same period, something like the Nifty has moved up just about 12 to 15%. Now there are lots of questions of whether or not there is froth in the broader markets. What is your assessment, and do you think that there are still opportunities here, or do you think that you'd be a slowdown from here on when it comes to mid caps and small caps at this moment?
Morning, Agam. Morning, Kush. Morning, Chandan. No, I think the euphoria in the broader markets has been broad-based, and I think the liquidity is one of the prime factors which has given fuel to fire in terms of the broader markets actually outperforming the main indices. Having said that, I think there is froth building up in most pockets in the broader market space. Yes, earnings have expanded over the last 3 to 4 years. But again, I think it could probably look forward. Will this earning pace get maintained to probably justify the premium valuations and multiples that the stocks in the broader market are probably getting at this juncture? It's a very difficult ask, if you ask me earnestly. But looking at the broader markets, our own sense is that you need to be very, very selective within this space. Obviously, I think most pockets within the markets are trading at their higher multiples of their average standard deviations. And therefore, any pullbacks will be welcome for the main indices also. But for the broader markets in particular, our own sense is that you have to adopt a very strict stock-specific approach because there is some element of fraud building up in some pockets as far as broader markets is concerned.
Yeah, Chandan, what about you? I'm not going to take a Nifty call because I think your stock picks are very, very valuable to our viewers. What are your top stock recommendations this morning and what is the time horizon for your top trades?
Good morning. Thanks for having me. Good morning to everyone. Looking at the market, I believe capital market or BFSI segment is likely to do well. And here I selected to be with insurance and AMC name. We have got some update related to the exchange listing, IPO process and all. I think because of that, there will be buzz and momentum in most of the capital market companies. So selected to go long on SBI Live. That is the first trading idea. Technically speaking, the stock has been making higher tops, higher bottom. We have seen delivery volume and surge in the trading volume as well. So one can buy with support of 1795. We are expecting a run up towards 1920 level. Second trading idea, that is buy on SDFC AMC. Positive price pattern on the daily chart. The stock has been making higher tops, higher bottom on the weekly. After the consolidating move of last 3 days, we have seen again fresh momentum and the stock is holding well above its rising trend line. We have seen a major momentum. Rounding formation on the weekly chart and extension of the descent wave could continue to take the stock to higher zone. So one can buy with support of 4400 for an upside target towards 4700. So two idea from financial and AMC's capital market and insurance or somehow positive on the BFSI segment.
Kush, what about you? Stocks that are looking good to you today?
A couple of them, Agam. First one is Indian Hotels. This is one stock, that we discussed in the closing show as well yesterday. After about 2 months, of hiatus and consolidation, the stock is now back to, the all-time high territories of 670. I think, this momentum could continue from a near-term perspective. 677, 688 are the targets to look at. 655 is where you place your stop loss. Given that this is the expiry week also, perhaps if the stock even does consolidate for the next couple of days, it's not a bad idea. The second one from the cash segment is RPP Infra. Now, this stock has seen a very interesting, up move in the recent, last couple of sessions. And yesterday, the stock's actually given a breakout, above that 210, 215 kind of resistance zones on the back of decent volumes, close to the, high point of the day. So I think this one could continue its up move. 244, 255 are the targets to look at. 225 is where you place your stop loss.
Well, those are a few more buy calls coming in from Kush. We'll take a quick break. We'll gear up for pre-open trade. It looks like it's going to be flat. Welcome back. You're watching India Market Open. It's expected to be a flat to slightly higher start this morning. Banks will be in focus. OMCs may also, of course, see some recovery after yesterday's sell-off. Of course, the expectation is that our eyes will be on RIL as they will have their board meeting. We have with us Mika's link. Mika was standing by with more details on this. Mika, what is the expectation from this much anticipated AGM? Actually, is it even anticipated? Because the markets don't seem to be getting too excited ahead of this one.
Yes, not much here because, and I'll get into that later just for viewers. The Reliance AGM 47th annual general meeting is set for tomorrow, August 29th at 2 p.m. Now, the street is not expecting much here as some of the key listings that the company has planned over the years might, get postponed. As for unlocking of shareholder value, well, the company may give information on the potential listings of Jio platforms, Reliance Retail Ventures and Reliance New Energy. But as per BofA Security, it doesn't expect any major announcement in terms of unlocking of share value. As for the retail segment, well, the street is likely to see future launch formats. They've also possible investment into quick commerce segment. Reliance has also been foraying into the beauty and apparel segment and could announce any partnerships with global players like Shein. In terms of the digital business, well, details on the Disney Viacom combined entertainment firm, which has made headlines, any more detailed information is expected. As for the new energy business, well, in terms of investments, the rollout of the 10 billion investments has been progressing slowly. Only 2 billion out of that has been used. A clear timeline for the fully integrated solar module ecosystem that the company plans is expected. However, it's key to know that solar module prices are less than 50% down at 2022 values, which is a headwind for the sector. To confirm, they're also expected to confirm the timelines for the battery gigafactory by 2026 and also expected to foray into the manufacturing on wind blades in the wind energy segment. As for the oil to chemical segment, which is the cash earner business for the company, unlikely to see any major announcements. We could get more talks about the supply chain routes, the crude supply deals and more of that. As well to the oil to gas segment, well, the company will give updates in terms of the new Krishna Godavari Basin wells, and the street has already discounted FY26 earnings as the whole segment has one headwind, which is the ban of single-use plastic. And when you talk about the stock performance in the company, well, we did analyze data, and data shows that the Reliance shares have declined on most AGM days. The stock has fallen in 7 out of the last 10 annual general meetings. The scrip declined as much as 6.2% in 2020, I say, and in 2023, the shares lost around 1.5% intraday. The only outlier was the 2019 AGM where the markets were closed on the date. Shares rose 12% after the 2019 AGM, but this is mainly on a key deal announcement with Saudi Arabia oil major Aramco.
All right, Mika, thank you so much for getting us that update as to what we can expect from Reliance Industries AGM. But with that, we shift focus to the auto sector. We have Abhishek Gaushande, Deputy VP Research at Sharekhan by BNP Paribas, who's joining us on the show. Abhishek, good morning. Thanks for joining in. Firstly, Abhishek, let's start off with a few comments coming in from, the roads minister, Nitin Gadkari. And, well, the comments, of course, in this case were to do with the scrappage policy, which could potentially have an impact of around 1 to 3% from what I understand when it comes to pricing. What is your own assessment on this particular issue going forward?
Although this scrappage scheme has been already exists in the market, but this was one leg, which is the contribution and discount from the OEM was awaited. So in 21, when this scheme was introduced, then along with the rebate in the road tax and the registration fee waiver, this was also proposed that the OEMs would also contribute up to 5% of the value, 5% discount as the value of the new vehicle. But now this OEMs have given announced for discounts of up to 3% in case of CVs and around 1.5% with a limit of 20,000 in the case of PVs. So although it is appearing that the discount level what was proposed to be is lower than the initial estimates, but considering that the prices of the vehicles have been increased since 21, and this has been an initial round of discounts that OEMs have been offering. So in that way, it's a decent step, which we can consider as one positive step in the right direction. But overall success of the scrappage policy would be dependent on the kind of value realization which an owner will get from the from the scrappage, and second that how strictly the fitment and other restrictions or the disincentive proportions would be implemented in the market.
Right. Abhishek, I guess we could potentially also talk about Tata Motors at the moment. Now, of course, we do know about the DVR shares getting expunged, but moving beyond, also want your view on how fund flows could potentially impact the stock, if at all, and also your view in general when it comes to Tata Motors.
Also, in Tata Motors per se, we have been positive given that it's getting strength in the PV segment in the domestic market, a first mover advantage in the EV segment, and beyond that, now it has been sustaining its double-digit EBITDA margin in the CV segment. Although JLR business is expected to face some production concern in the 2 quarters, but what we believe that given that the company has not so far reduced its guidance, so we believe that kind of a production loss which may happen for some part of the in Q2 or Q3, that would be managed by the latter part of the year. But the structural theme over is that all of its 3 cylinders are doing well. Its net automotive debt is coming down. Company is gaining healthy market share in the domestic market. Product pipeline or the product launches are strong, and its products are getting healthy response in the market. So considering that, we have a structurally positive view on the Tata Motors.
Have a follow-up on the scrappage policy. Is this measure better for trucks than cars? Because we obviously have more trucks out there which are older than by fleet operators.
Definitely. In the truck segment, what is happening that the replacement cycle has been delayed. The average age or the life of the truck is much higher than that of what has been historical average side. So it was expected that this particular policy would drive the replacement demand in the CV segment. Although so far that has not been seen, and what I feel that the key reason for that is that the scrappage policy is still voluntarily, and second is that it is more dependent on the fitment of the product than that of the age of the vehicle. So some interventions are required on that side also. If that would happen, then definitely it would drive the replacement demand in the CV segment. In the government segment, mostly in the bus segment, that scrappage has been somehow doing better than the private segment, because from the government vehicle side, it is quite mandatory that the vehicle should have to be scrapped out after the age of 15 years. So that mandatory establishment is quite required on the private vehicle side also. Till then, a need-based or the required-based scrappage would happen. As say, for example, as far as the second-hand value of the product would be higher than that of the incentives or the benefits which a vehicle owner is getting from the scrappage or official scrappage of the vehicle. Till then, it would be a less incentive for a vehicle owner to go for this formal platform. Although scrappages are already happening in the informal platform, this scrappage policy has one major motive is to transform that informal scrappage to the formal scrappage, or make the scrappage overall scrappage process a more organized way.
Sure, so this is all great for the company, great for the country, great for the for the environment, great for consumers. In terms of impact on auto companies, is there any, and if yes, which ones are you expecting to see an impact on back of this news?
As we have discussed that it would be more beneficial for the CV segment. So the players like Ashok Leyland and Tata Motors will definitely get benefited then, subjected to the quantum or the pace of scrappage would expand from the current level. So say, for example, in FY23 in the private segment, only 11,000 vehicles got scrapped through this scrappage policy. So the quantum or the pace would determine the pace of the replacement cycle in the CV sector.
Thank you very much, Abhishek. We'll try and connect next week with you to get better perspective on how to approach the auto pack and auto ancillaries, as of course the Q1 is behind us and we've got the festive season as well around the corner. But thank you for taking the time to talk to us this morning. Just before we move on, A quick one, Chandan, anything in the auto ancillary pack or Tata Motors specifically that you would have a trading strategy on this morning?
Yeah, so in Nifty Auto, we have more positive view on the Bajaj Auto, which has recently given a major breakout on the daily and the weekly scale. Technically, it has completed rounding formation on the daily chart. So I'll prefer more to go on Bajaj Auto with support of 10,250. It can head towards 11,000. But to reply on Tata Motors, I believe the stock has been consolidating in a range. Major trend is positive and multiple supports are clearly visible with put writing activity. So 1,065 could be a major support, and this time it can head towards 1120, 1130 levels.
Well, we'll do a little bit of a detour just before the markets open up and try and get this done before tracking market opening. Global Fintech Fest, an annual fintech conference, has kicked off today. They started 4 years back. The event claims to have emerged as the largest thought leadership platform in the fintech landscape. My colleague Vishwanathan Nair joins us with more on that. Vishy, you're at the location. You've got 5 minutes. Quickly tell us what's on the agenda.
Right, Samina. So you said the largest thought leadership conference. It's also the largest fintech conference in the world. Last year, if you were to look at the number of people who attended, that's about 75,000 people just in attendees. You also had over 100 product launches and nearly about 300, various discussion papers that came up last year at the Global Fintech Fest. This year promises to sort of break that record. That was already a record, and now expectedly this will go past that number. You've got a lot of international guests coming in and speaking, most importantly of which is Christopher Waller, who's going to be coming in from the US Federal Reserve. I have also listed a few guests who are going to be coming out and speaking at the event today. One of the most important ones, of course, is the Prime Minister Narendra Modi is going to be speaking on the third day of the conference. Later today, you've got RBI Governor Shaktikanta Das speaking, and then tomorrow you've got the SEBI chairperson Madhepuri Butch, who's also speaking at the Global Fintech Fest. This event specifically is, of course, a very busy event, and I'll ask my camera person Vijay Satape to sort of show you the kind of the kind of rush that is there. We are here at where all the stalls are lined up for the Fintech Fest. This is a 3-floor venue, actually 4-floor venue technically, if you ask me, and all of these floors are filled with distributors and people who want to display their new products at the Global Fintech Fest, apart from, of course, those discussion panels and speeches from various guests that are coming in. At NDTV Profit, we've got a crack team of reporters who are here, who are talking to various guests, getting you all the exclusive insights from various guests. I have with me Rishabh Bhatnagar as well as Haripriya Suryavan, who are both who have travelled here to Bombay to carry forward this event and the coverage of this event. Rishabh, you want to tell me a little bit about what you're looking forward to?
Yeah, I think there's 2 sessions that I'm particularly looking forward to. One's by Razorpay. They're about to announce India's first future-ready device. Not sure what exactly that means so far, but that's something I'm looking forward to. Another interesting one is on next-generation digital public infrastructure. I see an Aadhaar stall right there, right, and that's going to be something that's very exciting.
All right, Haripriya, quickly in 10 seconds.
Eager to track all the Bangalore folks, Chris Gopalakrishnan, Nandan Nilekani, and also the UPI for her announcements and products.
People you couldn't get in Bangalore, you probably get in Mumbai. So that was it, Samina. Look forward to a lot of coverage, a lot of interviews coming in from the Global Fintech Fest. Back to you at the studio.
We'll keep coming back to you as you, of course, cover that event for our viewers. Mayurish, we've got a couple of minutes to go before we go into market opening. Is there anything that you're tactically tracking right now or buying into your portfolio as we see it? Because finding value is tough, but it's not impossible.
Morning, Samina. No, as I said, being selective, Raj Industries is something that we are liking at Markets with India. I think the entire logic in terms of the 2G, 3G ethanol story is obviously getting played out. But I think a lot more products in the pipeline. So if diesel blending has to happen, Raj is working on that product, similarly on the ATF, similarly on marine fuels. And therefore, I think as the technology evolves at Praj Industries end, and as the implementation happens, they will have the first mover advantage, both locally and globally as well. Secondly, their engineering business and their high purity business, both in terms of water treatment, water solutions, and engineering products, along with a very strong order book, should augur well for better execution and stable margins going ahead. And therefore, our take is from a balance sheet perspective, from an EPS-RS rating perspective, from a cancelling perspective as well. It checks most of the check boxes that we are not looking at. That is something that we are liking at this.
That's interesting. That's a good call coming in from Mayuresh. Fundamentally, he said he likes Praj Industries. He said he's being selective. So, of course, we should be looking at Praj Industries because that's a counter that he's got a constructive call on. The markets, remember, they don't expect fireworks in today's day of trade. It's going to be another morning, another day of consolidation. Global cues have sort of been mixed as well, and we don't really have much to hold on to in terms of triggers for the next up move. For now, 25,000 is largely sacrosanct, and the bulls will defend that as much as they can in terms of trading activity. In terms of Bank Nifty, that's one you want to track. It's been an underperformer and a laggard for the last few weeks, but the next up move will only come if Bank Nifty provides a much anticipated support. As flat as it gets, 3 points off on the Nifty 50. It's trading with an 8-point lower start, largely in line with what Asian markets are doing. There you go. It's oscillating between gains and losses. But if I had to put money on this, it seems like there could be a little bit of consolidation with a slight negative bias as we see it right now at least. The broader markets, Bank Nifty is also now back in the red, trading with a cut of 100 points. 0.2% lower on Bank Nifty is what we have. So 103 points off on Bank Nifty in trade this morning. In terms of broader market activity, because that's largely where the action has been coming from, and the broader markets have inherently over the last couple of weeks as well outperformed the benchmark. It's no different. The Nifty mid-cap trades with a gain, and the small cap index and the micro cap index all eking out gains. So buying continues to remain in the broader market universe. Large cap space is quiet. Let's pull up the breadth and let's pull up the big movers and shakers on the Nifty 50 as we see it in the first few ticks of trade this morning. It's more or less a 50-50 split. So you've got a bunch of stocks that are gaining, but you've also got pressure building up on some of those other names. IT is back in the game. LTI Mindtree is up 2.5%. Wipro trades marginally higher. Cipla, Tata Motors, remember the DVR gets extinguished, and you've got Tata Motors weightage on the FTSE that will increase by 2%. Pharma is not doing too badly. Bajaj Finserv, RIL is trading marginally higher. Consumption is looking okay in trade. On the sell side, you've got BPCL is trading higher as well. So some of the sectors that are in focus is tech, which is seeing some buying, OMCs and consumption that aren't doing too badly. On the sell side, it's banks and it's pharma that sees profit taking, and metals. So no surprises there. Anything beta this morning is taking a little bit of a backseat, Agam. But I'm guessing the action will be in the broader markets. Frontline looking quiet, as always, actually.
Yes, Samina, you already pointed out that there's strength as far as broader markets are concerned. The mid-cap and the small-cap indices outperforming the mid-cap, or the Nifty 50 by just a tad bit, as you can see on your screen there. About a 0.25% advance for the mid-cap index. Small-cap index also up and about by around 0.4%. Let's talk about some stocks which will be in focus today. On the back of news, of course, we have plenty. So perhaps we can start by taking a look at those stocks which actually do have updates in today's day of trade. So Zydus Life, of course, it has an FDA approval on one of its drugs, which is up as much as 1.5%. NBCC, on the back of the bonus issue, it is going to consider one. We do not have the details yet. It is going to consider one on the 31st of August, and that's leading to a considerable rise in the underlying there. And of course, Indostar Capital is also in focus, considering it's sold one of its units to an asset reconstruction company. Moving on, in terms of, fresh investments, we have something like an IndiGrid as well as AB Capital. Both of them are looking at marginal gains, not too much to speak for. And let's also talk about, fundraisers. So we do have Skipper, which is again marginally in the green right now, looking at a 600 crore raise through debt and equity. And similarly, SPML Infra as well as Asian Energy also in focus for now. All in all, more gainers than losers as far as broader markets are concerned. And I'd reckon that's something that we will be watching out for today as well, Samina.
Quiet morning, Agam. It's not too much on either side. So you've got some of your tech names like Tata Elxsi is down 3.5%. Hindustan Zinc is down 4%. KFin is looking weak. Kaplan Point, that was on a winning streak, is now on a losing streak. CDSL is down 1.5%. CESC is also trading with a little bit of a cut. On the gaining side, the stock of the morning is GM Pfaudler. The stock is up 7.5% as we see it. NBCC, I highlighted this in the morning trade on expectation of a bonus issue board meet on the 31st. The stock is obviously getting excited. It's not going to be whether there will be a bonus issue. It's the quantum of the bonus issue that's going to be concluded on back of which NBCC is up 6%. NSE may get a nod for an IPO, but BSE seems to be getting excited about that this morning. It's up 4% as we see it. Aptus is looking good. Electra is back on the gaining streak. LTI Mindtree is also having a good day, and so is Trent. Chandan, any early thoughts? Anything that you've identified in opening trade? I feel like there could be an opportunity on OMCs today because they've started off quiet. Crude prices have corrected. Could an intraday opportunity be on an BPCL or an HPCL, you think?
Yeah, we can focus on HPCL. The stock has seen a consolidative move of last 3-4 days, and a small follow-up could give the fresh leg of rally. We have noticed that in last 5 days, the stock is finding hurdle near 411, 413 zone, and now just a few points away from the same. So I believe if moves by 2-3 rupees, it will open the momentum 4 to 5%, and the crude price is also supporting the bullish sentiment. So I believe one can go long on hold above 410 with support of 400, and the stock has potential to run up to us 425, 430 levels. If I talk about the BPCL, same sort of pattern. Declines are being bought. Multiple supports are visible near 340, 343. It can head towards 365. So one need to look at the BPCL and HPCL, and it seems that both the stocks are at the verge of the fresh leg of rally and the breakout.
Right. Well, that's the Mayuresh. You've got RIL's board AGM expected, and the stock isn't going into this one with too many expectations. How would you view the AGM? Any big bang announcements expected, or it's going to be a muted one this time?
No, frankly, I think nothing big bang that is probably expected to come in from the AGM itself. But obviously, I think the crux of the AGM will largely focus in terms of the new energy business as well. What probably happens in terms of their existing businesses getting demerged as well. But I think the street probably factors that in to a large extent. And the existing business dynamics work on a lot of factors for the land, specifically the upstream business and their petchem business. A lot of global factors are involved there as well. So nothing big bang expected out of the AGM. But yes, I think what happens to the new energy businesses, what is happening there, what the timelines, I think that will be very, very interesting.
Right. Kush, anything you've identified in the first few ticks of trade? It's turning out to be a very interesting morning. I don't know what's happening in GM Pfaudler, but the stock is up 8%. And NBCC also looking good. Between now and the 31st, is there an opportunity to make a quick buck on NBCC?
Well, I think it's up on the back of that news, but it's hit that resistance mark, comes close to 195. With the kind of gap up opening that we're seeing today, I'd perhaps be a little cautious. If you've got an existing position, ride on it. But for any new entrants, I suppose wait for a dip. BS, you've already identified that has had a good opening and is building onto those gains. But one stock that's on my radar is Aster DM. Steady, gradual uptrend, and now beyond that 410 resistance zone. I think there's a long way for this stock to go. So the risk reward ratio from a positional standpoint is phenomenal, but even from a trading perspective, I think the stock is starting to turn a corner around. So if you want to get in, then 400 is your stop loss. On the upside, you're looking at a 430 and a 445 as a target.
There's also a block deal update on NBCC. We were talking about that. About 97.3 lakh shares have changed hands in the last couple of minutes. Very quickly, Mayuresh, before we have to let you go, what is the verdict on NSE?
So I think like that stock, but let's see how it goes.
Oh, well, hopeful. It's the third time lucky if that happens, and hopefully a listing on NSE sometime soon. But BSE is not looking too bad. And we've got a view coming in from Kush on that. I think we would have to thank all of you for joining us today. We're slightly short on time this morning. But thank you, gentlemen. Sorry we couldn't extend this chat. There's quite a bit of news flow that's coming in as we see it. But hopefully we'll see you all soon. With that, we'll move on to the management of IREDA. The stock has been focused amid fundraising plans. We believe they're looking to raise 4,500 crores. through various instruments. Pradeep Kumar Das, Chairman and Managing Director at IREDA, joins in. Mr. Das, thank you for joining us this morning. IREDA has been in the news, and it's been in a lot of news. The stock has also been an outperformer since its listing. But walk us through, what are these fundraising plans? How do you plan to raise the money you're looking to? It's a significant sum of money that you're looking to raise. And of course, what will you do with the proceeds?
Yeah, good morning and thank you, Samina. And first of all, let me tell you what was the history of this company. Since 37 years, we are working in this space and we're the pure play largest green finance company in the country. And if it's last 4 years, we have grown almost 3 times, more than 3 times of our loan book. And what is the constraint 3-4 years back was the net worth. The net worth was stagnant fairly for 4 years, 2,200 to 2,300 around till 1920. So 2021 onwards, we could get the dividend exemption from Government of India for continuously 4 years, and then government infused 1,500 crore equity. Then we had IPO in November. So sigma of all the things enabled the net worth to go up to 9,100. And being a NBFC, the basic criteria is what is your net worth and how many times you can leverage, 7 to 8 times. But if you go for 8 times, then your CRAR will be down. If CRAR is down, then your rating will be down. Then we have been upgraded since last 2 years from AA to AAA stable. That is the highest rating by the rating agencies. So far, 4 or 5 agencies, they have rated us as a AAA stable. So what is our intent now is, we have the demand size, there is no issue at all because 500 gigawatt to be installed. As of now, around 205 in non-fossil is there, and the roughly 3,000 capacity addition will be there, for which 30 lakh crores of investment will be required. And out of which 22 lakh, if it is considered debt capital, and out of that 50% is expected to come to NBFC. And IREDA is a leading NBFC in this space. Almost 35% of the NBFC share is coming from IREDA. And in the likely the RE plan of Government of India, already MNRE has announced 50 gigawatt bidding annually. So against 12 to 13 gigawatt bidding or 15 gigawatt bidding, instead of 50 gigawatt bidding has been planned. That means government's policy, government's machinery is fully aligned for that 50 gigawatt capacity additions and annually. And whatever fund requirement is there, entity like IREDA has to play a key role, being the sole extended arm of MNRE. Now, what was the constraint? That was the constraint was only net worth, because our expertise was never been questioned by the stakeholder. We are even today considered as the most preferred lending agency in this space, and we would continue to do like that. So a couple of things we had to address before our IPO, and during roadshow, what we had communicated to our prospective shareholders, we have lived up to the expectation what we had committed to them, that we'll continue to enhance our loan book, we'll continue to enhance our profitability, we'll continue to give you much better qualitative corporate governance. And today we are in the country the first entity in banking and non-banking space who could publish the reporting audited result in the market. And that is what and continuously and consistently we are upgrading ourselves in this space. We will be sustaining and returning that, and drastically we have reduced our NPA, net NPA from 7.12 in March 20 to 0.95 in June 24. Not only just loan book has grown, but absolute terms, the NPA has also been reduced from 2,400 gross NPA, it has come down to roughly around 1,400. So, net NPA has come down to some 500 and down. In the time to come, we'll continue to work on reducing, because old NPAs we are trying to address settling this. And one input I would like to share here with the stakeholders is that whenever we have settled the accounts, most of the accounts, we have realized the principal and simple interest, or principal, the cost of funds. So that is a encouraging news for any project finance company having an NPA account in place. And our project appraisal system and review monitoring system and NPA management system is so robust that has enabled us not only improve the qualitative governance, but also to reduce the NPA and enable us to ensure a healthy qualitative loan book in our total 63,000 crore. And in that 63,000 crore, plain vanilla is around 58%. And 18% is coming from emerging sector. But 4 or 5 years down the line, what we have envisaged, more and more business is going to come from emerging space. And in emerging space, again, the stakeholder expects from us the kind of maturity and expertise what we have exhibited in the past, we should continue to sustain that. So because of that, we need fair amount of equity additions. And this 4,500, what we are going to take to our board tomorrow for taking in principal approval, as well as we have already requested our ministry, MNRE, to give us the consent from Government of India through DIPAM. That is also in pipeline. And this is a tentative figure. We do not know. And by the time we go and hit the market, be it for whatever mode, SEBI approved mode, be it OFS or QIP or any kind of mode, we'll be also revisiting the figure 4,500. Right now, we have planned 4,500 likely figure for February.
All right. Sir, the other question is, and here I want your understanding on margins going forward. How are you expecting them to pan out based on the your lending profile at the moment, and could it potentially change over the course of the next 3 to 4 years?
We are continuously working to reduce the borrowing cost that you have seen, and every quarter our borrowing cost is coming down. But when you talk about NIM, because we are not simple and ordinary finance organization, we are a project finance in new and emerging space. Now, new and emerging means sector is risky, and we have to be very careful to have a risk management in place. At the same time, we have to ensure the sector to come up. And if the will load the entirely risk premium to the sector, then probably will not be in a position to make the project viable. So we have to be very sensitive to it and sensible to it. And we have ensured that in the past. And if you see, despite working in new and emerging space in last 37 years, we have financed more than 1,31,000 crore, and our cumulative write-off is just 202 crore. That speaks our competency, capability, and intent to support the sector. See, we can easily enhance the interest rate that because so much of demand we are having, whatever net worth we are having, easily whatever we can borrow, we can lend. We don't have any problem. But the moment we raise the interest rate, the NIM may go up, but the projects which are becoming viable today, that may not become viable. So as a result, what will happen, the 500 gigawatt capacity addition, that speed, that may get dented. And moreover, our intent is to ensure not only the project is developed, qualitative asset book is also built. So therefore, we are not going for a very higher net interest component, but we are trying to reduce the borrowing cost gradually. See, a couple of initiatives we have taken, which we are going to get the result very soon. One is that 54 EC capital gain. We have requested Government of India, and we understand that is in the advanced stage of consideration. Once we get, that will enable us at least 5-10 bips reduction in our borrowing cost, average cost.
Right.
Second, we have opened an office in Gift City. The operation of that likely to commence maybe in a couple of months. And once it happens, so we can enable those forex lending to our developers who are keen to, in fact, they are keenly waiting for us how soon we can start it. Because today, our overseas borrowing has drastically come down. March 20, our resource composition, 57% was forex and 43% was domestic. Right. Today, June, it was 86% is domestic and 14% is 16% is forex and 84% domestic. Right. So that will enable us to further reduce.
Right. Yes, it looks exciting for IREDA. Thank you so much for laying it out for our viewers, and we'll hopefully catch you soon. Well, a quick move now from a sector that's been one of the outperforming sectors and has been getting so much more traction in the last couple of weeks. It's the IT sector we're talking about. Sandeep Agarwal, fund manager and co-founder of Saulio Investment Managers, joins in. Sandeep, hi, thank you very much for joining us. Give us a sense on how you're seeing the IT space, because the space has registered significant gains in the last few weeks. It's on the buy call of every fundamental and technical analyst right now. Earnings also were not bad, largely more or less positive, I would say. Do you feel like the good numbers have trickled in? Do you think it's time for IT to make a comeback? Is it already in the process of making a comeback? And are you a lot more comfortable today with this space?
Yeah, hi, thanks, and good morning. Thanks for having me on the show. So, if you recall our multiple conversations which have happened in the past, I think the sector has started making a comeback almost 6 months back. And this sector is a very typical sector which generally moves in a lag effect with the US big techs. And if you see, the big techs were doing quite well in terms of reporting numbers for last 5 to 6 quarters, and our industry was not doing well for last 8 to 10 quarters, which started with a very high attrition. TCS witnessed a 29% attrition few quarters back only. And with, in last 6-8 quarters, you would have seen that our attrition has now cooled off substantially. Now it has come back to the slightly below normal level. And that has triggered the higher margin this quarter, which you witnessed. And in my view, in this quarter, again, you will see a positive surprise from all the tech companies on the margin front. As far as revenue front is concerned, last 6-8 quarters have been muted. So you will see 2-3 quarters of good year-over-year growth. But let me reiterate, the global IT services outsourcing piece grows at 6-7%, and we grow at 8-9% because we gain some market share every year, and that gain of market share is also very, very minuscule because we are almost like having maximum of that. So I think this is a sector where you should look at 8-9% kind of revenue growth and 11-12% kind of profit growth. And if 1 or 2 years the returns are not coming, then you can be rest assured that the third year everything will get clubbed and come together. So I think we are in that situation since last 2 quarters, because prior to that the sector has not given any return. Now in last 2 quarters we are seeing more than 15% return for most of the companies, and I think another 10% is something which I believe will happen in the services space. So we are very comfortable in the large names which are reasonably priced, like the HCL, Techem and all. But in the mid cap, the IT services, I am not very bullish because they have never corrected and they are still expensive. ER&D is obviously a different story. ER&D is a structural 10-15 year story, and it can grow at double the rate of IT services. So obviously the multiples are high. So I would rather, look for large cap which are reasonably priced, and in mid and small cap, if I can get a play on ER&D at a reasonable value, that is what I would like to play. And because we run a PMS, so very hard to call out names because our client and we may be holding something. So very difficult to call out names, but the broad framework should be like this.
Right. In the large cap space, and it's largely legacy businesses, legacy clients, which some may argue are making a comeback. Now, this whole space was threatened with the threat of AI. Some analysts argue that could have been overdone in terms of what this is going to do to the legacy businesses. Is that the reason why you feel like maybe large cap names like a TCS and HCL and Infosys may provide better risk reward?
So in the large cap, there are a few points of comfort. First of all, if you see, they are sitting on very huge cash. They do buybacks. They have a stable management team, and having said everything, 10-12% EPS growth on a consistent basis is not at all bad, and that minimum requires 2.5 times PEG ratio. And I think we are there. Multiples are close to that. Like the large cap good names are between 22 to 30 times, and I think it is a reasonable value considering that these are the names which will keep on giving you 10-12% earnings growth for next 5-10 years comfortably. So I don't see a challenge from that perspective. But yes, that every time when technology disruption happens, I have seen 5 in last 25 years, people write off the Indian IT services sector, which is not correct. You have to remember we provide manpower. So we already are doing some work which becomes legacy when new technology comes, and you have to service those clients who are using your legacy service, and you have to build on capability for new service at the same time. So there is a transition period of 3, 4, 5 quarters when you have to train workforce into the new technology, and that is a period when we go through pain. And because of AI, we have gone through that pain for almost like 6 quarters, and then last 2 quarters we have seen recovery. We will see good recovery next 2 quarters also.
Right. All right. Well, Sandeep, a question also on the many managements that we've been talking about. And of course, 2 questions would be, one is the potential of interest rate cuts coming forward in the US. And secondly, whether or not a political regime change in the US could impact how business could pan out in terms of environment in the US going forward.
So interest rate cut has always been positive for Indian IT services, particularly because whenever interest rates cut have happened, the client budgets have opened up in a more bigger way, and it has always helped. So I think that benefit is yet to flow, which will flow definitely in the next couple of quarters. As far as, I would also believe that while, politics is there and internal matrices are there for every country, but the reality is that if you see last 20 years data also, there has virtually been never any unemployment in US tech side, basically, except that, 1 month of after Lehman crisis. Every time there is a shortage of manpower in the IT services side. So I don't think that, even if you make some changes, it will basically hurt the US consumers only, the corporates only, because they will end up paying more money because they need to get work executed, and the price arbitrage today is also 3 to 4 times minimum. And on top of that, there is no one available. So the challenge is that even if you restrict things, if you bring some tough legislation on this front, you have to remember that the manpower is available only from India, and toughening will only increase the price. So I don't think it has, in last 20 years, many attempts have been made. It has never been very strongly implemented. It's difficult because, and secondly, technology is a global thing. You can't restrict it into one geography or the other.
I know, valuations really doesn't stand in a market such as ours where everything is supposed to and looking so good. A couple of questions, right? What happens to FY26? Because in FY25, we've seen single-digit growth, maybe 3%, 5%, but do you think it's realistic to expect a double-digit growth for FY26? What is it that you're penciling in? And I ask you because some of these counters are trading at 15, 20 times 1 year forward. So is that even fair in my defense?
No, I think FY26 will be a very good year because of a couple of reasons. Right now, just recovery has started for Indian IT services in particular. So another 1 or 2 quarters there will be some recovery, but base will not be such that it will be a hindrance to the next year number. So I think FY26 is the year where you will see 8 to 12% revenue growth, and you add something on the margin front because attrition has fallen very sharply. So I would say you add another 3-4% on the earnings growth side. So you will see 12 to 16% kind of earnings growth for next year for the sector. And I think based on that, the valuations are not much stretched in my view. Obviously, there are pockets where, particularly in the ER&D space where the growth is also phenomenal, margins are also holding up. So there, multiples are little unrealistic, and they will, in my view, remain unrealistic for a longer term because the sector is on a structural uptick.
All right. Well, based on that, Sandeep, how are you placing stocks on your list in terms of preferences at the moment with the way things are right now?
So if we speak particularly on the IT services space, we are playing 1 or 2 large cap names because they are reasonably priced. There is a good dividend and all. And we are looking for ER&D companies, small ones, which are not much attention is there, which are trading at a cheaper valuation. Obviously, they are not delivering the kind of revenue and margin they should. But that is the time when everyone is pessimistic. That is the time we should pick up because investment means that you have to wait. You have to wait for the business cycle to turn. You have to wait for the business to turn. You have to wait for the leadership to deliver. So we are investing little ahead of time, and it may hurt us in near term, but I think in next 3 to 5 years, phenomenal return could be made on those names. So that is one way. Secondly, I think, we believe that the bigger theme is also AI. And unfortunately, in India, there is no direct AI play. We don't have NVIDIA's. But in my view, a good proxy for that is probably power. You have to play the whole power chain to get the benefit of returns on the stock from the AI perspective. So that is what we are using as a proxy.
All right. And moving on, Sandeep, just want to perhaps better understand the current rift between the mid-cap players and the small-cap players. The clientele that both these, these sub-segments are dealing with are completely different with respect to requirements, with respect to the different challenges that they actually have to undergo. How are you placed based on what you can foresee, at least in the near term?
So we always, actually the way we play is we never differentiate between large, mid and small cap. When we choose stock, we choose the capabilities and the segment we are trying to play. So right now we are trying to play ER&D through, and within ER&D, whichever is available at a reasonable value, we try to play that. In IT services, I think on the outsourcing, pure, data-based, very, very boring work type of companies we are trying to play because those are only available at a reasonable price. The rest, all good companies, good names, they are all trading at 40-50 times forward. So it is impossible for us to pay that kind of valuation because we are a value fund. We don't want to get into that high growth, high multiple thing.
All right. Okay. There you have it, Sandeep. On that note, thanking you for joining us and giving us your perspective on the IT industry. Of course, the next few months are going to be very, very crucial because of the impending and high probability chance of, well, seeing rate cuts in the US and, of course, the all-important US elections as well. Let's see where that takes things for the Indian IT sector. But with that, let's shift focus to, well, and perhaps talk to a company which is directly invested in the economy of the US. Well, I'm talking about Zensar Technologies. Let's pull up how Zensar has done over the course of the last 12 months and see whether or not it has, in fact, given you traction. Do remember that Zensar is coming off the back of a reasonably good year in terms of its performance. It's not only added in terms of its revenues, but it's also, in fact, listed a new vertical in its earnings statement, and that's the healthcare space. And that's your return over the last 12 months. So it certainly has given returns. Whether or not it is outperforming the Nifty IT index, well, it's been volatile. Let's be honest, because it's not been the best of business environments for the entire IT sector. Well, to take us through this and we'll take this conversation ahead, we are now in conversation with Manish Tandon. He's the MD and CEO of Zensar Technologies. Manish, good morning and thank you so much for joining in. Let me start by asking you first about the implications of the rate cuts in the US and the business environment. Does this mean a change in sentiment, or will there be perhaps will there be a little bit of a lag effect that will come, assuming, of course, in the first place that there will be rate cuts?
Yeah, I think it's very interesting, the dynamics with the Federal Reserve rate cuts, because for the last 2 years, people have been saying rate cut, rate cut, rate cut. There has been no rate cut and the market has gone up. Okay. Now, suddenly that Federal Reserve has indicated that, that there could be a rate cut as early as September. The market is now thinking that, okay, why is the Federal Reserve cutting the rate? Because that means that the economy is maybe not going to do too well. And that is why they are cutting the rates. So suddenly, now that there is some indication that rate cuts will actually happen, the focus has shifted to the economy. That, all right, Federal Reserve is cutting rates because maybe it feels that the economy is not going to do too well. And again, the dreaded R word has started, recession word has started happening. So it's a good position for the Federal Reserve to be in because most policies have this yin and yang, and I think their objective of trying to make a soft landing out of it seems to be getting closer than what we had seen in the past. Materially, I don't think much changing till the US elections are over and the new president is sworn in.
Right, Manish, in the past, you also mentioned that clients in the US are holding on to opening their wallets in a big way for the US general elections. Now, two parts to this question. First, will the outcome of the upcoming election have a bearing on business environment? And two, does it really matter if it is in fact Trump or Kamala Harris who comes into play? Is there a difference in terms of how they actually look at, perhaps a business environment going forward?
See, my point of view is, frankly, that I'm just looking at it from a Federal Reserve perspective rather than from a political perspective. And if you see, then the pressure on the Federal Reserve from the incumbent or the future president at this stage is not there. So pretty much Federal Reserve can do what they want to do and is good for the economy. So that is how I am looking at it. But it will depend more than the political dispensation. I think it will depend on what kind of deficits, fiscal deficits, etc. will happen because, interest rates are just one part of the equation. The second part of the equation is are the deficits and the money supply and Federal Reserve balance sheet. And I think while the monetary policy is one side of the equation, the other side of the equation is fiscal policy. And the political dispensation will decide the fiscal policy going forward. And if the fiscal policy is too lax, then the monetary policy has to be tightened and vice versa.
Right, Manish, given the current environment, we also wanted to understand the difference in the client profile. So how are the needs of a $1 to $5 million client different from those of $10 to $20 million clients? And is there a huge difference with respect to their own requirements, the different challenges and the problems that they need to solve going forward?
Oh, that's a great question, actually. Agam, no one has asked me this question before. But again, I would say that ultimately, the people who are spending 10 to 20 million at one point in time, today, were in one point of time spending 1 to 5 million. So it's a growth trajectory. Some people will go from 1 to 5 down to 0. And there will be some people who will scale up to 10, 20, 50, 100 million, depending on how the business does. Good news is that if the interest rates really come down, then interest rates really impact the smaller players who are dependent on credit much more than the larger players. So, and as you perhaps, if you're following the US market, you will see that there is a shift happening from the Magnificent Seven to a much more broad-based, smaller and mid-cap stocks also. So that is the difference. Ultimately, you use technology to drive scale. If you are a smaller company, the need for technology is limited. If you're a larger company, just to manage the scale of operations, you need much more technology.
And of course, let's also talk about Gen AI then. In terms of areas of opportunities and area of cautions, where is Zensar seeing their responsibilities, and what are the role that Zensar is looking to play here?
Yeah, I mean, look, generative AI is another tool. It is not, a cure-all for everyone. That is the first important thing to realize. Second thing to realize is artificial intelligence is really artificial. So there is a error rate associated with each of these responses. All right. And my view is that when you are designing these applications, you need to take these error rates into cognizance and then design the use case. Also, these are fairly costly. While the answer might appear very quickly, there are very costly computations going on in the background. So that cost-benefit analysis also needs to be married to this overall equation. So while I'm very excited about the technology, and we are doing some great stuff with that technology, I just want to caution my clients that, let's not, jump headlong into it and invest a lot of money without seeing some tangible economic benefits out of it.
Right, Manish, you guys have also put in a lot of investments in telecommunications vertical, and the question really is that how have things changed over the past couple of years, and what are the newer requirements as far as clients are concerned as compared to perhaps a couple of years ago? What's the impact of 5G as well?
So So I think see, change is constant, and from especially in the telecom sector, from the good old plain old telephone lines to mobile and to internet and so on, we've seen dramatic changes, and that cycle continues. The Moore's law is catching up, so the technology is becoming cheaper. And reach is increasing, the use of technology is increasing, so that is causing a lot of demand, and at a lower price point. So what is happening in the communication sector really is that you have to constantly innovate, and people are innovating mainly at the convergence of various media types. So voice is one media, internet is another media, films, communications, video games, all this are another media. So because of that convergence, the turmoil in the sector continues to be there. Also, the much hyped 5G did not yield as much benefits commercially to the carriers as they thought it would, in my opinion. And that also has meant that some belt tightening is happening.
And finally, Manish, your plans on the newest vertical which was listed in the income statement just last year, healthcare. What are your plans here, and how are you expecting this particular segment to come through?
I am very excited about the healthcare vertical overall. As you know, I have cut my teeth in this vertical a few years back, and it's a vertical where you're actually contributing directly to, you're making an impact on people's lives directly. So very excited about it. We have a very good game plan in place. It's a very vast vertical overall. So broadly, you can divide it into payer, provider, pharma, med devices, and so on. We have chosen a segment which is more closer to pharma and med devices. We have chosen a sub-segment of that, primarily commercial, and we want to create that beachhead there and then expand from there. And in line with that, we have also acquired Ridgeview Life Sciences, which specializes in this sector. We are very excited about welcoming them to the Zensar family, and I have great hopes from this sector.
Manish Tandon, we'll leave it at that. Thank you so much for joining us and taking us through your views on how Zensar can, in fact, play that role in the Indian IT sector and take it forward. But with that, it's a wrap on this edition of the India Markets Open. Up next is Talking Point. We have Harish Krishnan, the CEO and CIO and Head of Equity at Aditya Birla Sun Life, who's joining us on the show. Stay tuned in, and we'll be back in just a bit.
And it's a new kid on the block. Orient Technologies, which was subscribed over 152 times, is all set to make its debut on the exchanges. The markets were quite excited about this IPO. Grey market premium does indicate a pretty steep uptick in opening trade. A gap up of 45% is what GMP was indicating to. Most brokerages had a buy and a subscribe to this IPO, so there is enough and more excitement around the 600 crore listing that did get retail investors quite excited. Well, it should be clicking on your star. That's exactly what we have, 46% higher, largely in line with what the grey market